Back when I was an investment banker, my boss liked to say, "A fool and his money were lucky to have gotten together in the first place." And it seems like investors have completely forgotten about the SPAC meltdown that happened earlier this year, where a lot of SPACs lost a lot of value. I called out many of them as extremely frothy. And just the last week or two, we've seen now 2 SPACs where they've rallied several 100% in effectively a day. Previously, I covered a video on Trump Media and Technology Group and how that company announcing that SPAC deal rallied several 100%. Today, we're looking at Bakkt Holdings, Bkkt is the ticker, where they announced some really interesting headlines with really major players. And the stock rallied several 100% today and also a couple 100% in after hours. Let's dive in to understand what's the setup, what's going on. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. I'm looking for potential multi-baggers, the types of stocks that could potentially go up hundreds or even thousands of percent over time. Let's dive in to understand Bakkt Holdings. Bkkt is the ticker. And so here's the disclaimer. You can read it on your own time. And so as we look at this, Bakkt Holdings or Bkkt stock went parabolic earlier today on news that they were launching partnerships with Fiserv and Mastercard to make it easier for merchants, banks, and fintechs in the U.S. to embrace and offer a broad set of cryptocurrency solutions. So that gets a lot of folks excited because they're saying, wow, this is a relatively small brand, partnering with the behemoths of, the traditional finance landscape like Mastercard. And in order to understand, okay, so what does Bakkt even do? So they want to be the app for owning and exchanging any digital asset. You see a lot of things on here, whether or not it's in-game rewards or crypto assets, rewards miles, if you're a frequent flyer type of thing, miles. If you want to trade cash or stock, or if you want to buy things online, be able to purchase them at a discount. So here it is. Let's have the everything wallet or everything, platform where you can trade everything. And for quick background, Bkkt was founded and is majority owned by Intercontinental Exchange. It's a behemoth exchange platform company that trades millions upon millions of dollars of assets. The platform itself is worth something like $70 billion. Intercontinental Exchange. It's publicly traded. ICE is the ticker. And they have some notable stakeholders as well in Bakkt, which includes Microsoft, Starbucks, and Boston Consulting Group. And so these partnerships that were announced today, this is clearly part of Bakkt's expected growth plans, because you can see how they're expecting to grow active users from zero, nothing, nada in 2020 to 31 million by 2025. And that is effectively saying, hey, look at the best, fastest growing, fintech platforms. Look at how they've grown. We think we can do better than Robinhood effectively. And we think we can do it as good as Square's Cash App. Now, their business model in terms of valuing this thing, because if you're going to actually treat this like a business, you need to actually understand, well, how you're going to generate money. And they effectively say, hey, there's a couple of different revenue sources where their business model is driven off of merchant discount rates, i.e. converting the merchant rewards into cash, effectively taking some sort of cut like a 2% spread, or trading or converting Bitcoin, whether or not that's some sort of reward or purchasing something in Bitcoin or doing some sort of trade in Bitcoin. Once again, this is around a 2% haircut, and they specifically call that out of about a 2% spread on Bitcoin every time someone wants to buy and sell it through their platform. Management expects to enable nearly $1 billion in crypto trading this year, 2021. This was their presentation from a few months ago, and nearly $3 billion in crypto trading next year. Their actual revenue is only a tiny fraction, a teeny tiny fraction of this, as this is the gross dollar amount of effectively crypto asset that they're expecting to trade, but their revenue is going to be this total revenue less transaction-based expenses. So much, much less. That's effectively the 2% of this plus the transaction and subscription service fees. So you're looking at a teeny tiny fraction. So this is the real revenue to think about this business is this figure, not the highly inflated crypto, the total revenue figure that includes the dollar amount of anything, that the gross amount of anything that's traded in terms of the cryptocurrency. And keep in mind, they're only keeping 2% off of each transaction. Now, maybe I shouldn't say, only, because, as you look at this, I think these projections are extremely unlikely. Wouldn't surprise me to see them pull them, within the next 12 months to 24 months, completely pulling these projections like you've seen many SPACs do, because they're assuming a 2% take rate on these crypto exchanges, these crypto trades for years in the future, literally saying out to 2025 that they're still going to be getting this 2% cut. When in fact, you can look at other platforms. I personally call out Interactive Brokers. That's where I use, for my own personal investing, where Interactive has something like, for crypto trading, it's something like 1/10 the cost of what you're looking at here. So I would be super surprised if they're able to keep a 2% take rate in the years ahead. So what about the valuation? And first, I'm going to do a quick plug for the first time, for the viewers that are tuning in for the first time, or if you're interested in following along with my personal financial journey, go to unrivaledinvesting.com, where each month I call out potential multi-baggers as well as portfolio update for what I'm personally doing. We also have an exclusive community dedicated to learning and trying to find exceptional companies on Discord. So once again, if you're interested, go to unrivaledinvesting.com, click join the journey. And if you enjoy learning about potential multi-baggers, whether or not they're companies that are way overpriced or potentially cheap, please make a point of hitting that subscribe button, hit that thumbs up button. And so first, in terms of thinking about the valuation of Bakkt Holdings, folks are looking at Yahoo Finance or whatever their app is, and they're going, wow, this is up a couple 100%. Now it's up to $30. In the after hours, it's up more. It's now around $50, so several 100% today. And people are looking at Yahoo Finance and they're thinking, oh, wow, $1.5 billion. There's a lot of potential here. And the reality is that's wrong. $1.5 billion is not the right figure, because now that Bakkt has de-SPACed, they actually have 267 million shares outstanding, times by the share price of around $50 per share. Now, maybe it'll come down. Maybe it'll go back to 30, but around the $50 after hours price, that's around a $13 billion market cap. Keep in mind, this for a business that they already pointed out in 2020 had 0 active users. Now, look, I've covered many companies here at Unrivaled, and the reality is that while I pass on most, Bakkt, I really believe, gets a special mention for terrible risk reward. All of the above companies, Hyliion, Proterra, C3.ai, once they went public, each of them I called out as having significant downside, all dropped more than 50%. Sometimes I'd call out, 80% downside, 90% downside. I wouldn't be surprised to see that, with here, what you're looking at with Bakkt Holding at that $50 share price. Now, look, maybe they can surprise me. I'd love to be surprised with fantastic execution, because that means the world is changing and maybe they're doing something really special. So, I'd love to be surprised, and remind me again, in their upcoming quarterly financials, if they say, hey, those projections we made, yeah, we're going to beat them. So I'd love to see that. And so thinking about the valuation, management projected that by 2025, they could reach $515 million in revenue and around $242 million in EBITDA, or about 55% margins. That is the juiciest of the juicy margins, 55%. And in this hypothetical valuation framework that I'm using, I use a range of assumptions that get to around 200 to 500 million in revenue in the years ahead, potentially maybe 40 to 60% margins. Because look, if you're able to do a lot of sort of trading, that can be very lucrative. That can be super high margin. And I'm assuming 30 to 40 times earnings. Honestly, I might not even give them that in reality. I would want to see how they're executing, but I'm trying to figure out, okay, what are investors even playing for at a $52 share price? Because that's where it is in the after hours, after the market closed today. Sort of saying what's the upside that speculators are playing for here? And based on these assumptions, 200 to 500 million in revenue 5 years from now, 40 to 60% margins. Operating margins, that's better than what management penciled out of 55% EBITDA margins, 30 to 40 times earnings. This yields downside of roughly 90% to negative 20% over the next 5 years. So this is a terrible, risk reward in terms of just and keep in mind, this is just the upside. If they don't deliver and don't execute, yeah, that 90% would look increasingly accurate. Now, of course, could the stock price go higher or lower? Absolutely. I mean, that's the nature of a speculative market. But this personally strikes me as terrible risk reward. I'd personally rather wait to see how they execute and then revisit. I'd want to see, like, okay, it's okay to pass on things, folks. You don't have to, have the FOMO of like, oh, I got to buy this, it's going up. Like, look at it, recognize that This company had 0 active users, at least that's what they called out in that presentation material back in 2020. Like, if this is truly going to be just an amazing company, you can get in on it after they prove some execution. So let's see them beat their guidance that they previously put out, their projections. Let's see them say, oh yeah, we are crushing it. We were conservative. These partnerships, this is doing way better than what we expected. At that point, humble pie for me. Let's revisit when they start saying, oh yeah, we originally penciled out 55 million in revenue. We're going to do 75, 100 million. That's awesome. That would be great. And I'll want to revisit it at that point and say, okay, what's the risk reward? At this point, I'm just not seeing it. I personally see a lot better risk reward. I just called out my October potential multi-bagger, a company where it's like trading at a significant discount to its equity value, where I'm penciling out very conservative range, very conservative assumptions, getting to something like minimum 70% upside using very conservative figures, something like 200 to 300% upside using more reasonable figures. That's exclusively for the Unrivaled Investing Journey subscribers. If this video talking about Bakkt Holdings Bkkt stock has been helpful for you, please make a point of hitting that subscribe button and hit that thumbs up button. Thanks so much for watching.